Hello, everybody. This is Live Trading Talk with Patrick MontesDeOca, Market Wrap for January the 5th, 2022. What I would like to do is to share with you the recent report that we published in the Associated Press and Seeking Alpha on January the 5th, 2022.
This is the Equity Management Academy Mean Reversion Trading weekly podcast for January the 4th, 2022. Gold. A reversion to the mean is long overdue. Summary. Gold is down in part because the 10-year note has shot up about 10 basis points to 163.5. So interest rates are rising. We may possibly be in the last phase of the pandemic, but still a great deal of uncertainty. Inflation continues to affect every sector of the economy. There are also supply shortages across the board. Gold and silver are the only commodities in the negative territory, which is highly unusual. Fundamentals. Gold is down to 1802. Gold is down in part because the 10-year note has shot up about 10 basis points to 163.5. So interest rates are rising. Silver is at 22.79, also down. We are buying silver at the market at 22.82 on the May contract. The target is 23.15. Bitcoin is about $1,100 or a little more than 3% up. Bitcoin is in a bearish weekly price momentum, but a daily bullish signal unless we get above 48,087. The Equity Management Academy CEO Patrick MontesDeOca said, one of the fears in the market is about interest rates. The economy is showing some resilience in terms of retail sales. But the Omicron variant, which is highly infectious, may harm the market. We may possibly be in the last phase of the pandemic, but still a great deal of uncertainty. We could have more lockdowns. It sounds like March 2020. But it could potentially be the end of the pandemic. Inflation continues to affect every sector of the economy. There are also supply shortages across the board. Gold is down about 4 or 5%, and silver is down about 13-14% for the year, which are tremendous anomalies since we are moving into a highly inflationary period. Gold and silver are the only commodities in the negative, which is highly unusual. Gold and silver will act when you least expect it, MontesDeOca said. Price discovery will adjust gold and silver prices upward rapidly at some point in the near term. A key issue is whether the velocity of money will increase, leading to further shortages in the markets. The Fed and government are printing more money, thereby debasing the currency. The Fed policy is to decrease the buying of bonds by $30 billion each month, which will take us into the third quarter to bring us down from this massive stimulus program. The next move would be whether interest rates would be raised. We are moving into a potentially slow economy, MontesDeOca said. It is unlikely the Fed will raise interest rates significantly in the face of a 30 trillion in debt. However, the market may drive interest rates up, especially if the Fed continues to pump stimulus into the economy. It is my conviction that interest rates cannot go up in this environment. We are seeing a tremendous increase in value in real estate and other hard assets, which reflects the weakness of the US dollar. Inflation will increase pressure for interest rates to rise. But it is just a matter of time before we begin to see acceptance that interest rates will have to come down again into deeper negative rates instead as the economy slows again. Grains are beginning to explode as a consequence of shortages in food. Soybeans are breaking out, as is soybean meal. These are moves. These moves indicate that inflation is in the grain markets already. We expect the metal markets to follow suit soon and move up significantly. Therefore, gold and silver are in a major buying opportunities. Be patient, MontesDeOca said. Continue to add to your positions in gold and silver at these levels. They are completely oversold in relation to the prices of other markets and commodities. We have been waiting since August 2020, a longer than expected correction. But do not despair. The time is coming and gold and silver will move up when you least expect it. Continue to accumulate and buy gold and silver.
I wanted to share that report here and also basically take a look at what we did today using that information, using that intelligence. Let's take a listen to the activity of today, and then we will analyze the end results after this report.
Good morning, everybody. This is live trading talk with Patrick MontesDeOca for December 17, 2021. What I would like to do here is just to take a couple of minutes to digest the market volatility that we have right now and see what the data is for today daily and also for the weekly numbers. Gold is trading last at 1807.90. It's up about $9.80. Silver is up.
This is the report that essentially was aired this morning at 7 o'clock Pacific Standard Time, and essentially applied the intelligence, the signals that were published in the Associated Press and Seeking Alpha. These are the signals that I am teaching and coaching in my live trading room at the Equity Management Academy.
$0.10 at 22.59. And we have Bitcoin down about 2,100 points, down to 45,900. If we take a look at the data here for the week, the buy one level is at 46,005, and the market is penetrating this level, and it's activating pretty much an active signal first. If you don't have a position, if you don't have a signal, a close above 46,005 will activate a weekly buy trigger. What you see here is that the market got up to completing the target of 49,100 as of yesterday. It completed this target. This target has been in place for the whole week since Saturday, when we published this information, and this is the average price. And it told us that previously, if you were long and you came into this average price, this is where you go neutral, take your profit, and wait for the next signal. When the market trades below the average price, it simply identifies the momentum, the bearish trend momentum. Now, the methodology that we use, that I use personally as a trader, is that I want to take the highest probability trades. And so mean reversion trading means basically that you want to sell the extreme above the mean or the average, or buy the extreme below the mean. So what we've seen here is the reversion to the mean unfold, and the extreme below the mean has been completed. So this pattern that you see, this bearish pattern that you see here on Bitcoin, has been completed at 46,005 from 49,100. Now, we are in a high probability area where the market is telling us to be prepared to activate a signal, a trigger point. This is where we identified the highest probability trades. And so weekly signal on a weekly basis at 46,005, which is the end of the week here this week, would be a weekly signal, and this would be a buy trigger. So we're preparing to buy Bitcoin on a close above 46,005 using the 15-minute bar, which is what we use to execute the signal. So we are patient with our digital assets here, waiting for the completion now of the reversion to the mean at the extreme below levels, activating a weekly buy trigger. We get through 46,512, it brings in the daily trigger, the daily model that is extremely oversold right now by the market trading below 46,512, or the buy to level as indicated. We use pivot points here in a different way than most conventional wisdom, in that the algorithm identifies a very specific structure of 5 pivot points, and within those 5 pivot points it extrapolates the extremes mathematically on a probability model, on a probability basis. So when you're looking at the buy to level, daily, weekly, or monthly, you're looking at a 95% probability that the market is oversold and potentially could revert back to the mean. Those are the trades that I want to trade. Forget about the fundamentals, forget about CNBC, forget about all this other fundamental noise that we have right now in these markets. I'm trying to show you how I identify what the market wants to do, and the price action will dictate the direction of the market. The price action is the consequence of the momentum, basically. Prior to the price is the momentum, and this is what we see here identifying for us. So I'm pretty comfortable knowing that if we do get a reversion above 46,005, it's going to be a pretty strong signal weekly, and it's going to be confirmed by the market engaging the daily model as well of 46,512. So we'll be patient and wait to see what the market will do before we decide to take a trade here. Let's go back to the gold market here. That is approaching an area that we call distribution of supply. In red, which is the opposite of blue, below, which is accumulation of supply. And we've been recommending our trader subscribers, if you take a look at my videos here, basically these levels to be triggering buy triggers on a daily basis and being supported by the weekly price momentum, which is turning bullish and activates the targets, the weekly targets above. In this case, the target of 1807 is the weekly target that's being completed right now, in addition to obviously the daily targets in between, as you can see. So this level now here in gold is identifying the highest probability where we could potentially see supply come into the market. And as you can see here, the price has reacted to that supply that's coming in, and the reversion came down into the support level that essentially became support once it closes above the resistance. So this level here is a pivot. Good morning, everybody. This is live trading talk with Patrick MontesDeOca. for January the 5th.
This is the video that we aired this morning at 7 a.m. Pacific Standard
Let's
Time.
jump right into
That documented all of the live trades that we did for the day, and follow the information on the report.
Gold is up $12.40, trading last at 1826.70. We've taken some profits here this morning on a swing trade. And we are continuing to maintain our position. A swing open position, one open. Our target is 1846. We have entered into the area which is called the distribution of supply, where the algorithm identifies the pivot points between 1824 and 1846 to be an area where you can expect potentially supply to come into the market. Regardless of the fundamentals that are completely inverted to the market here, what rhythm and trading in the gold market, silver market, and Bitcoin. What we're talking about here is the algorithm identifying the bought condition in the market. The 1824 is the resistance level for the day, and the market closing above this resistance 1824 makes this area an area that has activated the 1846 target. But if you look at the left, weekly sell one target is also 1845. So at 1845, the daily and the weekly level of resistance aligning basically that target, if completed, could be a potential reversal point.
Hang on a second,
Let's take a look at the gold market. Silver is pretty much in the same situation as gold, and the sell one level daily is 24 contract swing that we are carrying here. So we use this algorithm for us to day trade, swing trade, and position trade depending upon your profile, and this is what we basically teach and coach and share in our live trading room at the Equity Management Academy. All the trades are real trades that are posted daily, and we're going to continue to share live trading here as we're doing. For those that are serious traders that want to use a probability model, completely unemotional probability model, which is computerized, which is an algorithm, which is a code that is written in C++ in easy language, coded in TradeStation. Live trading as I trade my account and show you how basically this application can be applied or can be integrated in trading not only in gold, silver, or Bitcoin, which are the markets of choice that I choose to trade at this point, because you really don't need to trade a lot of markets. Within these markets, for example, if we take a look at gold, we have a slew of derivatives, stocks and derivatives. One of the instruments that we focus on is a derivative for the gold market that essentially is Nugget.
Let's come back here and let's go back into the live trading room here and take a look at basically what happened here since this morning when we advised our clients here to take profits as we did. We locked in these profits. The market essentially experienced the supply that was expected. The algorithm tells you this is a high probability area where you can see supply come into the market. And when the market made a high of 1828, that was it, and we began to see supply come into the market. This supply came down below the sell one level. It activated a trigger, and obviously you saw the waterfall reaction here coming down from 1824 to meet the target, which is the initial target weekly of 1817, and the daily sell level, the target was 1811. Completed. So it took the profits of the weekly targets and the daily. Now the market slowed as it approached the daily average price and the weekly average price, and it's now consolidating below this average price. So we booked a nice day today in gold, as well as in silver. We booked about $1,240 in silver, and the gold already is resetting itself. So in terms of the platform, we netted about $1,240 in silver, and we are holding two long positions as the signal has been activated, and it's a buy trigger on a swing. This is a weekly signal that has been activated as we close the day, and we are going to be holding the signal and put the targets above that we have of 2302, which is potentially a target that we can use. This is the daily target, and if you want to wait till the numbers come out, then you want to use the average price for tomorrow. The weekly target that doesn't change is 2315. Bitcoin, sorry, there's no signal in Bitcoin, but the market came below the buy one level. It did not activate, obviously, the trigger point that was anticipated about 45,233, and came down to the buy one weekly level of 43,883 by making a low of $43,290. So the weekly trigger point is a close above 43,883 for Bitcoin. This is the type of information here that we're going to be doing at the Equity Management Academy live trading talk in the morning and the live trading market wrap in the afternoon, and transparently show you how we create wealth by applying the VCPMI for day traders, for swing traders, or position traders. Thank you again, my friends, for the opportunity to share this with you. Until next time, you be well. Take care. Be safe.